If someone has only been trading, let's say 3 years, bearing in mind, we're going here to 2020, that was 4 years ago. They didn't even start trading then. Do you think that the conditions here are the same as here? Not at all, right? So imagine, I'll go back further, bearing in mind Falcon started literally around here. So Falcon is all of that. So you can imagine the experience that a lot of our traders have. So I got a lot of questions off of the back of the video that I've done about why I only don't trade one pair. I think this is going to be really useful to you. I'm going to give you a high level overview from a technical perspective as to why I don't on a more detailed level. I think a lot of traders, they're too zoomed in, they're trapped on lower time frames. They don't really know how to utilize the higher time frame. And by not using the higher time frame correctly, you don't really anticipate specific type of conditions. Now, I think a lot of traders, their conditions or their mindset is based off of what their perception of the conditions are. Well, I want to show you on the charts exactly how, if you don't have the correct type of experience, you will just have a perception of what you've traded. So if you've only traded for a couple of years, your thought process is going to be, well, I think that trading one instrument is just fine. And then when you go through lots of drawdown, which is really prompting me the episode, I've had so many traders from the start of this year, I'm talking 3rd of Jan, all the way up until this point. I've never had so many traders that are limited to 1 or 2 instruments tell me how stressed they are. And it kind of got me thinking as to, like, why are you so stressed? And when I looked at it from a broader picture, this video is going to be so useful to you, and it may even help avoid these periods where you're just going through loss after loss after loss. There's only so much time you can get hammered by the market by trading one instrument where you go, right, enough is enough. I understand how you feel. I'd be stressed as well. I kind of looked at it from that perspective. If I was you trading one instrument and all my experience was, right, January up until this point, I was down in drawdown, minus 12%. I'd lost loads of funding, or let's say I was funding, I was expecting a payout, but I don't even know if the firm that I'm going to get a payout from is going to be around any longer because of the shit show that's going on in the prop firm world. I would be stressed as well. So I'd feel exactly the same way as you, and I really think this video is going to help you out and hopefully calm a little bit of fears. And speaking on the prop firm world, if you don't already know, so for March, we've never done this before. We've been running our in-house fund now for nearly 3 years. For the first time ever, if you are a Falcon member, it doesn't matter how long you're a member for, so if you joined last week, for the month of March and March only, considering what's happening in the prop firm world, you have direct access to our funding. So all the links are in the description, and you'll be taken care of, put it that way. We're only a limited amount of spaces, so we've done this for March, and we want to look after you guys, especially in an environment where everyone is pretty stressed, and we've got all of the infrastructure, so every fear that you've got, we've already got it covered. So if that is of interest to you, I would take advantage before all of those slots go, because once they're gone, and it's March only, so take a look. However, let's get into the chart work. Before we get any further into this episode, make sure you are subscribed to the Market Brief. It is our free weekly newsletter. Every single Monday morning, you will get free weekly analysis delivered straight to your inbox. A few minutes a day and you'll be up to date with the financial markets. Links are in the description to subscribe to the Market Brief. So I've got the DXY. I'm going to keep it simple with the DXY, and maybe in some later weeks, I might do another technical video and go a bit more intricate. So look at it like this. I've got with these vertical lines a time frame here. Now imagine your experience is the most recent experience. So let's go over to this period. So if we look at, we even go from December. So from December, let's go back here. So from December time, your experience is, let's say, right, December wasn't great. You hear a lot of traders say, don't trade in December, don't trade in January, don't trade in August, and too many conditions. So if my experience was only from, let's say, here, right? So if my experience is only from here, from 2023 all the way to here, I have a limited amount of experience, because all I've really seen is a sell-off and then just this market range. That's all I've actually experienced. So then if that's my limited experience, then I'm going to project to you, well, this is what I think you should do in these months. But that's not actually reality. That's just a small section. And I've highlighted all of these runs here for those of you that think that you're using the higher time frame but not using it correctly, and you'll see what I mean. So of course, if you're having loads of drawdown in January and February and you was limited to one instrument, and I'm on the DXY here, of course, if you was just trading Aussie dollar, you'd probably be in that category, I would be worried as well. If you're just trading euro dollar or pound dollar, yeah, you'd probably be going for a whole bunch of drawdown. So I would probably be in that position where I'm trying to reassure myself. I would do exactly what you're doing, I get it. But let me just show you the wider picture, and I think this will make a bit more sense. So look at this overall bigger picture. Do you think that when you're trading in this period and in this sell-off and in this sell-off is the same as trading through this or trading through this? It's not the same, and we're on a daily here. The problem is when you're trading for, let's say, even 1 year or 2 years, you feel like you've been trading forever because chances are you've been putting in the work day in, day out. So you've had hours, hundreds of hours of chart time. Your perception of, well, this is what I think trading is, but you have a limited experience, so I don't blame you. However, let me zoom out. Look at this, bearing in mind the people that you're seeing do it, because you might say, Mark, well, do you know what? It's part and parcel, it comes with the territory. I know a trader who has been trading for X amount of years, let's say 3-4 years, they've been successful, they've traded 1 or 2 instruments, and that's fine. All the power to them, and there will always be an exception. There will always be a small percentage of people that can do that, but not the masses. And that's why the statistics on the prop firms are the way that they are. So I ask you this, if someone has only been trading, let's say 3 years, bearing in mind, we're going here to 2020, that was 4 years ago. They didn't even start trading then. Do you think that the conditions here are the same as here? Not at all, right? So imagine, I'll go back further, bearing in mind Falcon started literally around here. So Falcon is all of that. So you can imagine the experience that a lot of our traders have. So imagine you start learning to trade in that cycle, just that cycle. Do you think that your experience here is the same as there? Right, so if all you've ever experienced, you just started to trade and you was in a really great run and you was essentially just getting long on euro dollar for all that time, you could trade one instrument and you would be sweet. You'd be over the moon thinking, why would I want to be trading anything else? I just want to trade this. It's inverse correlation. Let me just trade euro dollar. While this was selling off, I was just buying euro dollar. Okay, so that's your experience. Then what do you do here? This is where people give up. This is a 2-year period. So on the flip side, do you think 2 different people, one person started here and one person started here, what is their perception of the market at this stage? One person thinks that the market is just ranging and squeezing, doesn't really commit to these long-term moves, and all they can really do is zoom out and go, well, I know they exist, but that's not really my perception. I just think this is what you should do, because you've had 2 years of it, where one person is going, well, no, I know what it's like. The market can be aggressive. You just need to wait it out. And long and behold, you wait it out, direct. Then it consolidates, then it's direct, right? And then we go into another direct move, and then guess what? Your experience is just this, or just a little bit of this. So you can now understand that when you zoom out, look at the bigger picture, you'll realize you're basing your opinion off of such a small sample size. It's not realistic. It's not even reflected in data. Before we move further into this episode, if you haven't already, make sure that you are subscribed to the YouTube channel. The more you invest into the channel, the more the channel invests back into you. We love creating these videos and we really appreciate the love and support. You're a baby at this point in terms of market experience, and this is why market experience is so valuable if it's the correct type of experience. So if you're saying, right, I use daily sentiment, well, think about it. I'll show you a little just technical detail here. So you see this high of 2016. This is no coincidence. We break the highs, we get people caught on the wrong side of the market. We was always going to take out these lows, and then we went into this short-term bullish run, and then it was just a squeeze all the way up. You can see that the gap that we'd left here. Now you might be wondering, well, why is this useful to me? So imagine you're just trading one instrument, and it could be, let's say, pound dollar. We get this sell-off here, we break out of this squeeze, and now we're looking long. Why would we be looking long? We'd be looking long because we're filling the gap at the 2016 high. So from a higher time frame narrative point of view, you would be positioning yourself above this area here. And why this area? And I'll show you, really simple. You'll be positioning yourself above that area because this was the low, that was the break, here was the area, this was the sharp hook point. We then sold off, we left our gaps, we broke above, and then we retested the back end of this area, which was the follow through of that run to fill that gap. So all the while, you're using higher time frame, but not understanding the positioning of the DXY, it hurts you, and there's no reason for it to hurt you because this is basics of market mechanics. And if you look at that run, why would that be useful to you if, let's say, you was trading euro dollar or let's say pound dollar? Well, all the while this is going up, what's happening to the opposing instrument? It's going down. So all the time the DXY is going up, you're literally selling euro dollar, you're selling pound dollar. So when you're taking your positions, that helps you to not get sucked into these minor levels that are noisy, where you're taking loss after loss after loss, because you understand how to position yourself from a higher time frame point of view. So that's just one overview, and this is just a high level overview of just trying to get you to understand that the market is not the same. So if your whole opinion on the market is don't trade in January, don't trade in December, and all these things, do you think that's actually reflective? Because how could you say from here, and we'll go 2014, how could you take a snapshot of all of that and say the market has been the same the whole time? It's not, and all you've got to do is look, consolidation, direct, move up, squeeze, sell off, consolidation, direct, sell off, now it's ranging. And a lot of people's experiences in here. So that's their opinion of, let's say, trading these USD-based pairs. Now, I want to give you a bit of a different insight. Why would I not be bothered about a squeeze here? So in Falcon here, it says 2-year squeeze. Why would I not be bothered about here? Well, let me just zoom out even further so you understand. This square that you can see, this is me. So you've got experience of your average trader, which probably, I would say, most people that you see online right now haven't been trading more than 4 years. So that's their experience. There's nothing malicious about what they're doing. They're just projecting to you, this is how I see the market, and they will have things that work. However, trading one way, one system over a decade is completely different ballgame of experience. So when you look at all of this, so they've been trading roughly, if we say 2020, that's 4 years, that would be your average, right? So their experience in the snapshot is that. Essentially, after that squeeze, down, up, down, range. Can you now, even then I didn't even think about this, let's just prove my point even more. Can you now understand why it would be difficult for someone to give you some guidance if their whole entire experience, which to you seems like a long time, I'm following someone who's been trading 4 years. Yeah, that seems reasonable and respectable. This is their experience. So can you see why now, not sure what to tell you, the market is what it is. Oh, hey, don't trade on a Friday, don't trade on a Monday, don't trade in Jan, don't trade in August, don't trade in all these things. Of course, I would be saying the same shit. I'd be saying the same thing. But if you traded long enough, you'd realize there are different cycles. So this little dot right here, this is my experience. Now, this is not to blow my own trumpet. I'm trying to give you an understanding as to why do I think the way that I think? Because the question you always want to ask yourself is, right, if they don't have what you want, don't listen to what they've got to say. So if I've built my wealth and I've got into this position, my way of thinking and my behavior, my attitude, my mindset, my procedures have got me here. So the way that I'm looking at the market will have validity to that, because that's why I've got myself in this position in the first place. And it's why I've not had to chop and change all these different systems over these years. So if my experience in 2008 is all of this, what do you think my perception of the market is going to be? Do you think that I would be surprised or shocked by anything happening from a technical point of view? Of course I wouldn't, because I have seen all of this as a squeeze. I have seen this, right? How can you tell me that this right here, this snapshot, which is 2012 till 2014, so a couple of years, right? Let me just strip that all back, right? This is really important. Do you think that it would be fair for me to say that this piece of price action here is almost identical to that? Would that be a fair assumption, right? That this piece of price action here is identical to that? Yes or no? Okay, so if I'm trading in here, do you think I'm surprised by this and what to do in that period? No, why not? Because I have the experience. Experience. So when this was squeezing here, do you think I'm shocked by that? No, why not? Because you can just look at all of these periods and see that they are just smaller degrees or bigger degrees of the same thing. Like really and truly, if you just take this piece of price action, that squeeze, this was a more complex version of that. And then all this became was a larger move. And what did I just show you previously? There was the gap, what happened? So if we was positioning ourselves long, why would we be looking for longs in here? To fill the gap of 09, I'm talking 2009 here. So the same ideology and the same overview that I'm telling you as to why this gap was filled from a higher time frame here is the same behavior that I'm telling you, this missed this high in 2010 to the 2009 high. So what was the chances after we broke that low here, right, which was the low of November 2009, we then broke it, and then phase 1, phase 2, phase 3. Falcon Mechanics 101, by the way. So what I'm showing you here is the same thing over and over again. But if you've not experienced any of this, you're going to be very, very stressed out. And that is exactly why I wanted to give you this high level overview to say, look, I don't blame you for feeling the way that you feel. When traders send me messages in my inbox, in Instagram, etc., and they're saying, look, Mark, I don't want to trade, in this stressful way. This has been my experience, and I don't know if I'm going to get paid out, and I've only been trading one instrument, and I think this is the right way to do it because I have seen some other people successfully do it. I get it. I would think exactly the same as you. What I'm showing you here is that this is a DXY, so this is a basket, but you will be affected if you are trading these instruments, and affected by other things as well. But if you could just look at high time frame positioning and you could see what type of sequence that you're in, you'd better prepare yourself for these things. Now, what I might do in a future episode is, okay, it's all well and good, but if I'm not trading, let's say pound dollar at that time and it's in that sort of sequence, and I know I'm going to go through a large part of drawdown, then what other instruments should I trade? Well, I'll show you them side by side so you can see. I'm not trading 28 pairs. More often than not, I'm looking at 2 or 3 instruments on the day. That's it. It's not stressful. Don't make it stressful. And what I'm saying to you guys is you need to accept what comes with the territory. Because if you say, look, I'm going to trade one instrument, fine. Well, you also have to stop reassuring yourself. You also have to accept, well, you could go through, minus 12, minus 14% of losses. Are you comfortable with that? Are you comfortable trading 800K of capital that you've gone through a good period and made money, now have to trade through this squeeze that you have no experience, you don't know what to do? Are you comfortable losing all of that funding without a proper plan? Can you see my point? Trading is just not one way of thinking. It's a holistic point of view, and you need a plan in place, you need infrastructure, like what we've got in our in-house fund, and you need a formula to be able to mitigate against these times. Otherwise, you're going to be euphoric and you think, right, I've cracked it, I know what I'm doing. And then when shit hits the fan, you're going to be stressed as hell. So it's really important you factor these things in. So let me know what you think about this episode anyway. Actually, what I may do is let me just move over to euro dollar, and I'll just show you a couple of phases that I think will be important for you to look at. So for example, you could have avoided losing so much money in January and February just by doing this. So let me just show you.